that the government has recently tightened the law surrounding input tax credit claims? Did you also know that provisional input tax credit is no longer allowed? Well, many businesses are now worried that these new rules could badly hit their cash flows and working capital. But do not let your business suffer simply because your vendors do not upload invoices on time. We have the perfect solution to minimize non-compliant vendors and maximize your input tax credit claims. By the end of this video, you will find out how to do this and in the process increase your working capital by up to 7%. Hello and welcome, I am Simran from Clear, from the makers of Clear Tax. We are India's largest tax and financial services platform. We serve more than 3,000 large enterprises and more than 4 lakh growing businesses. Please subscribe to our channel to get clear explanations of direct tax and GST updates and finance concepts to help make better business decisions. In 2019, the government had introduced the concept of provisional input tax credit or ITC, where businesses could claim 20% ITC as provisional ITC. This limit then got reduced to 10% and then 5%, and now there is an absolute restriction, that is 0% provisional ITC that can be claimed. In other words, ITC claims will now be restricted only to the extent that the respective vendors upload their invoices in the GSTR1 or through the Invoice Furnishing Facility or the IFF, and the same should get reflected in the buyer's GSTR2B. This means that if a business's eligible input tax credit claims are not 100% accurate, the cash component of that business's GST liability increases. In simple words, when you do not claim optimal ITC, you pay a higher amount of GST in cash. And when this happens, your working capital takes a hit. Did you know that you can unlock up to 7% working capital just by maximizing your input tax credit claims? Yes, given the new input tax credit laws, one of the strategies to effectively manage working capital is by maximizing your ITC claims. But it is not possible to ensure that 100% ITC is claimed on each and every invoice without automation. Further, the new ITC amendment has also increased the dependency on vendors manifold. This also puts pressure on businesses to put in place an automated system of vendor communication and follow-up. And then there is the problem of non-compliant vendors, which can only be solved by withholding payments or at least the GST amount. Because why should your business suffer just because your vendors do not comply? Well, all of these issues can only be resolved through automation, which is now the need of the hour. So do not let your working capital take a hit. I'll soon tell you about India's first solution for maximizing input tax credit claims to unlock working capital. Clear has recently launched Clear Max ITC, India's first solution for maximizing input tax credit claims and completely automating vendor communication and payments. Clear Max ITC offers a host of unique features that are proven to maximize ITC claims and unlock your working capital, such as the fastest AI-based reconciliations. AI-based tools match invoices without any errors and help identify 100% input tax credit. Second, automated data reconciliations. They take place at regular intervals through direct data pulls from the GSTN and the ERP. Third, automated vendor communication. To keep follow-up efforts with vendors at a bare minimum while pushing them to upload invoices on time. The next one is smart payment decisions synced to the ERP. Based on automated vendor categorization through an intelligent vendor scoring mechanism, it lets you automatically withhold the payments of non-compliant vendors. And the last one is advanced user access management. This helps to define access rights for each team and keep your data absolutely secure. So are you finding this video useful so far? If it is useful, then please type yes in the comment section below. I'm sure that you are curious to know how the Clear Max ITC platform works. First, the Clear Max ITC platform forms a two-way connect with an enterprise's ERP or accounting system. This helps schedule auto-reconciliations of the GST data at frequent intervals and in syncing vendor payment decisions. For example, an enterprise can set its vendor payment terms to automatically withhold the GST amount or the entire amount due in cases where the vendors have not filed their GST returns. This decision can then be synced to the ERP for all the future payments. Next, the AI-based tool runs automated data matching at frequent intervals with 100% accuracy. If any missing invoice or missing data is detected, an automated communication is sent to the vendor via email, WhatsApp, etc. Well, thanks to automation, over time, the number of defaulting vendors reduces and ITC is optimized, thereby unlocking working capital. Did you know that Clear Max ITC helps businesses reduce their GST cash outflows and increase working capital by up to 7% by way of ITC maximization? Well, would you like a quick demo? I'm sure you do. So here is the demo of the Clear Max ITC platform given to you by one of our product experts. We are now at the end of video 4 of the series, The Insider's Guide to Working Capital Management. In this video, I took you through India's first solution for end-to-end automation of the input tax credit claim process, as well as told you how maximizing your input tax credit can increase your working capital by up to 7%. Please don't forget to click on the link in the description below to explore the Clear Max ITC solution. And in case if you haven't already, do subscribe to our channel for clear explanations on various finance concepts. Thank you. This is Simran signing off.